10 years ago, there was an industry almost nobody was talking about. It wasn't dominating headlines, it wasn't driving the stock market. And most investors had never heard of the companies that would eventually create one of the biggest wealth building opportunities in modern market history. Fast forward to today, and that same industry helped create Nvidia's explosive rise, fueled the AI boom, and generated life changing returns for investors who got in early. So I started asking a question: what industry today might be sitting in the exact same position? So stay tuned. Welcome back to Simply Money. The funny thing about investing is that the biggest winners rarely look obvious at the beginning. Looking back today, Nvidia seems obvious. Semiconductor ETFs seem obvious. AI seems obvious. But if we rewind 10 years, almost nobody was talking about the opportunities that would eventually create trillions of dollars in market value. Investors who recognized the trend early didn't know Nvidia would become Nvidia. They simply recognized the technology wave before everyone else. And today, I think there may be another technology wave beginning to form. In this video, I'm going to compare where the emerging industry sits today versus where semiconductors sat roughly 10 years ago. Then I'll show you historical simulations using Nvidia, SOXX, and SMH. Finally, we'll run projections to see what happens if this new technology follows even a fraction of the path that semiconductors followed over the last decade. So let's dive into some of the sheets. First one I want to show you is the Nvidia drip sheet. Now, I don't offer this one because these are really designed for income producing funds, ETFs, and stocks. And there's not a lot of income coming from Nvidia, but it's nice to use it for backtesting purposes. And that's what I'm going to show you here. So what we have here is we have Nvidia back in June of 2016, 10 years ago. It's a quarterly paying. Like I said, the distribution doesn't make a big difference in this, but it does slightly change things. And we're going to be looking at $50,000. We're going to compare all of these funds at $50,000. The first thing I want you to see is the impact of what if we had got into Nvidia 10 years ago. We're going to look at the known producers, Nvidia, SOXX, and SMH, and we're going to see how they have done over the last 10 years. Then we're going to introduce this new sector, this new industry, and see what would happen if they followed a similar path, and we'll share a couple ETFs that I think are strong contenders to be in the same type of position. So as we look at this, and don't mind here, this doesn't update because this is not a drip sheet, but it's just showing us the starting price at $1.17. Stop and think a minute. Today, if you had known just 10 years ago that Nvidia at $1.17, you think, oh, if I'd only put in $1,000 or $100, the amount that you could be making off of this is incredible. Hindsight is 2020. We all wish we could go back and get an Nvidia and change things in our financial journey. Life doesn't work that way. We wish we could probably do that in lots of things outside of finances as well. What we do have is learning from the past to try to move forward and make better decisions. And financially, we want to do that as well. So we have $1.17 for Nvidia back in 2016. And if you follow it at all, you know right now, today, it is sitting at $2.11. It is just skyrocketed. Your $50,000 would be worth over $7 million today. That's just to show the power of that. That's the only reason I'm showing you this sheet. The sheet I really want to get into is our Simply Money Portfolio Planner. And what we're going to do is we're going to look at the historical data from SOXX, SMH, and Nvidia, and then we're going to project forward two new industries that I want you to look at. So we looked at Nvidia, and SOXX and SMH follow a similar path. Nvidia would be I'm going to take all my eggs, put them in one basket as a single stock, a single company. And yes, we all wish we had picked that. But for those, you're like, I don't know which company. There was lots of emerging companies. We hear about Nvidia because it survived, it grew, and it took off. There are other companies that you've never heard of that have gone bankrupt, that have gone out, or maybe they've been merged with someone else that were acquired because they just didn't make it. And that's where an ETF comes in. It bundles a bunch of companies together. You don't have to pick which one's going to be the winner or the winners. It puts them all in one basket for you. And then as it's growing, companies that aren't making it fall out, new companies will take its place. And that's what SOXX and SMH are. They're ETFs of semiconductor companies. And back in 2015, 2016, 10 years ago, semiconductors were important, but they weren't viewed as the backbone of the global economy. AI wasn't mainstream. Data centers weren't consuming massive amounts of computer power. Autonomous driving was still largely theoretical. Yet underneath the surface, semiconductor demand was quietly building. Nvidia became the poster child for this transformation. The company evolved from gaming graphic cards into the dominant supplier of AI computing infrastructure. And investors who own semiconductor companies or semiconductor ETFs experienced extraordinary returns as demand accelerated year after year. But here's the part that caught my attention. The technology I'm about to show you shares many of the same characteristics that semiconductors had before the explosion. The industry I'm talking about is quantum computing. What is quantum computing? Traditional computers store information as bits. A bit can be either a 0 or a 1. Quantum computers use qubits. A qubit can exist in multiple states simultaneously. And what that does is it allows quantum systems to solve certain problems exponentially faster than even the most powerful supercomputers. The applications include things like drug discovery, AI training, financial modeling, cryptography, logistics optimization, material science, and climate modeling. And the reason that investors are paying attention isn't because quantum computing is replacing traditional computers, it's because there are specific problems that classical computers may never solve efficiently. See, Microsoft, Alphabet, IBM, Nvidia, Amazon are all investing billions into quantum research and infrastructure. That's what makes this interesting. We aren't talking about speculative startups operating in isolation. We're not talking about Amazon in the garage. We're not talking about these startups that you hear about 20 years down the road. We're talking about some of the largest technology companies in the world investing heavily in the technology. So I want to share with you two different ETFs that I think are worth doing some deep diving and some research. And I want to put them on your radar for you to be looking and doing your own due diligence. First ETF is QTUM, the Defiance Quantum ETF. Think of QTUM as the diversified approach to quantum investing. Rather than making a concentrated bet on a handful of quantum startups, QTUM invests across the broader ecosystem, including semiconductors, AI infrastructure, advanced computing, machine learning, and quantum technologies. So this approach may reduce some of its upside if pure quantum companies explode higher, but it also reduces the risk that comes from betting on only a few early-stage companies. QTUM has approximately 87 holdings. They have a broad global exposure, heavy semiconductor and advanced computing focus, and lower concentration risk. Their top 5 holdings are Intel at 2.6%, Micron Technology at 2.5%, ST Microelectronics at 2.3%, and Nokia and MediaTek both at 2.1%. One thing you'll notice is that QTUM doesn't look like a pure play quantum fund. In fact, many of its largest positions are semiconductor and infrastructure companies. That's important because semiconductors are the picks and shovels that help power quantum development. In many ways, QTUM looks similar to what an investor might have wanted before the semiconductor boom really accelerated. Now, this next ETF is the one I'm really interested in, and one that's on my radar is WQTM, the Wisdom Tree Quantum Computing Fund. This one takes a much more direct approach. It was specifically designed to target the companies building the quantum ecosystem itself. As a result, you'll find a much larger allocation to companies whose future success may be directly tied to quantum computing adoption. WQTM is made up of approximately 47 holdings. It's much more concentrated, has a higher exposure to pure play quantum companies, and potentially higher risk, also higher reward. The top holdings, you have IonQ at 7.9%, Rigetti Computing at 6.2%, Intel at 5.8%, D-Wave Quantum at 5.7%, and Quantum Computing Inc. at 4.2%. You can see a much heavier concentration with only 47 companies and the top 5 getting a much heavier allocation. Unlike QTUM, WQTM puts some of its largest positions directly into companies that many investors consider pure quantum plays. If quantum computer becomes a major commercial success, these are the types of companies investors expect could potentially see the biggest impact. The trade-off is that many of these companies are still early in their growth cycle and may experience significant volatility along the way. Now, here's the thing that gets interesting. Nobody knew 10 years ago whether Nvidia would become Nvidia. Nobody knew whether SMH or SOXX would generate the returns they ultimately produced. Investors simply recognized that semiconductors were becoming increasingly important to the future of technology, so I wanted to ask a simple question. If quantum computing follows even a fraction of the path that semiconductors followed over the last decade, what could that mean for investors? To answer that, I built several scenarios using historical data from Nvidia, SMH, and SOXX, and then projected those growth rates onto today's quantum ETFs. So let's see what the numbers say. So we're diving in here to the Simply Money Portfolio Planner. If you have not seen this, you can get a copy of it down below in the description at Buy Me a Coffee. All of our spreadsheets are available there. This one is really fantastic. You can do all sorts of projections on this. But what we're using it for today is we're just going to do a simple comparison of those 5 funds we've been talking about. And the first one we're going to do is we're going to look at SOXX and SMH. I have them right here in the conservative side. This isn't because it's conservative or aggressive. It's just an easy side-by-side comparison I can do. And I have $100,000 invested. That way $50,000 goes into each fund. We're going to look at $50,000 per fund. So for this, because I'm going to run them side by side, we'll have $100,000 split evenly. We're not doing any deposits, so all these are zero. And if you don't know what these are, you can watch one of the other videos in the playlist, and you'll see how this works, as well as the withdrawal rules. We have 0 withdrawals set up on this, because we're just simply, what if we put $50K in, we let it ride 10 years ago, what would it have done? And we come over here to the forecast to make sure we're on the conservative model, because that's where we have SMH and SOXX set up. Then we click on the Forecast Pro. You can see SOXX is at just under $700,000, and SMH is at $417,000. So if you had invested $50,000 10 years ago, even SMH, think about that, $400,000. That's doubling 3 times in 10 years. That's like doubling your money every 3 years. If you're familiar with the rule of 72, you know that is incredible opportunity right there. And look at SOXX, almost 4 times it has doubled. That's like doubling your money every 2.5 years. That's how impactful these industries have been. And these were plays that were, okay, I don't know if it's going to be Nvidia or some other company that we've never even heard of now because they didn't make it. We didn't take that chance, but we said, okay, we're going to go into SOXX or SMH and just get a basket of these semiconductor companies and see what happens. And that's what would have happened. Incredible. Now we want to go back over here. We're in Nvidia. We have to change the value to 50,000 because we only have one fund there. So we want to make sure Nvidia is getting 100% of that 50,000. We got to come to the forecast because we're modeling this under the moderate model. So come to forecast, put that to moderate, and come back over here and check that out. $1.4 million. Yes, we all know Nvidia is Nvidia now. It's in the Mag 7. It's leading the way. But we didn't know that 10 years ago. What I just showed you a little bit ago, the share price was $1.17. People were like, I'm not buying this company. All they do is make gaming graphics. That's going to go away someday, or some other company will take over. I'm not putting any money in there. $50,000 would have turned into $1.4 million in the matter of 10 years. We're not talking a 30-year projection. This is what it has done. I'm not showing you what it could have done. This is actually what it has done. This is historical data. You can see that right here. I have it set our return mode. We're using historical data on this. Now what I want to do is we're going to come back over here. We're going to project forward these new industries of quantum computing and what would happen if they did similar. So we have 50,000 in QTUM and 50,000 in WQTM. Now I'm not using historical data because those are newer companies. It's new yet. We're back in 2016. If you had run 2016 projections from 2006 to 2016 on Nvidia, you wouldn't be seeing those returns. So what we're going to do is we're going to put this in the mode of what if it has the same type of return, and I'm going in the 90th percentile, just like Nvidia, SOXX, and SMH have had over the last 10 years. As far as the market, they have been in the 90th percentile of returns. So we're doing the same thing with these. What would it become? We have to come to the forecast because we have that set up under the aggressive model. Come over to Forecast Pro. They would predict, and this is, again, projections. We don't know. They may flop. These ETFs may not make it. But QTUM, which has a little bit more of the semiconductor, it's more diversified, it's projecting that it's not going to get as much of the upside because a lot of that's already been found and had in the early explosion of the semiconductors. But WQTM, $1 million. It could be more, it could be less. But either way, I would be happy. I don't know about you. Leave your comments down below. Would you be happy if you invested in something $50,000 and in 10 years it was $470,000, perhaps even the $1 million? We don't know. I'm not saying this is what's going to happen. Again, this is not financial advice. This is simply for informational purposes. We're showing what Nvidia, what SOXX, what SMH has done, and if this new quantum computing technology takes the lead like it is projecting that it could, this is the type of thing we could be looking at, another Nvidia style entry point. I don't know about you, it piques my interest and it's on my radar. I am doing a lot more research and diving on that, but that is showing what it can do. Have you heard of quantum computing? Have you heard of QTUM? Have you heard of WQTM? Go ahead and leave some comments down below. What are your thoughts on that? Leave me some dialogue. Let's get dialoguing about this new emerging market here that's coming. And let's really start looking into this together and share with the community things you find. If you find an article, go ahead and put that in a comment. Put the link in there so we can all look at it. Let's continue to build that community together and help one another reach our financial goals. I appreciate you joining me. Don't forget to hit that like and subscribe button. Leave me a hello if nothing else in the comments, and I'll see you next time on Simply Money.